Is your investment strategy ready for 2024's challenges?
We've gathered top insights from market experts like Philippe Gijsels and Gareth Soloway.
Get ready to digest vital financial information quickly.
Find out why investing in commodities is becoming essential as inflation rises.
Welcome to Financial Insights in Minutes, where we optimize your time for crucial market knowledge.
Stay tuned for insights on the troubling job market from Jeff Snider that could reshape your portfolio strategy.
Anchors away. Let's dive right into a frosty topic. Jobs. What's happening in the labor market?
Here's the scoop. Jeff Snider discusses how the job market is practically frozen, with alarming signs indicating a looming recession.
That sounds chilly. What's got the labor market in a stranglehold? What's the core takeaway from Jeff Snider's analysis?
The labor market is in serious trouble. Hiring has tanked, raising real concerns about a potential recession that policymakers seem reluctant to acknowledge.
Let's hit the key points, starting with those plummeting hiring rates.
Absolutely. Snider reveals that hiring rates have plunged dramatically, now sitting at 5.32 million. This is practically a flashing warning light.
What's going on with the Fed and their rate cuts?
Well, it's quite the twist. While Powell claims the economy is solid, he just slashed rates, a classic case of saying one thing and doing another.
Next up, let's talk about those job quits.
Indeed, Americans aren't quitting their jobs anymore, a clear sign that fear of unemployment is dominating, leading to a stagnant job market.
And what about the manufacturing sector? What's the latest?
The ISM data reveals severe contraction. It's not just hiring. We're seeing a broader decline in manufacturing employment too.
How does consumer confidence fit into this puzzle?
It's critical. Confidence levels are plummeting as people brace for worsening job conditions, which could cripple spending across the board.
What's on the horizon based on these indicators?
The signs are there. Hiring freezes could soon turn to layoffs, dragging us deeper into recession territory.
What do we anticipate from the Fed moving forward?
More rate cuts are likely as the situation deteriorates, which in turn might not be effective in alleviating job market stresses.
To wrap it up, what are the driving forces we should keep an eye on?
The labor market is in free fall, and unless we see action, a recession seems inevitable. Policymakers need to stop pretending everything is fine.
What's the key message moving forward?
Stay vigilant. The job market doesn't lie, and understanding these shifts is vital for anticipating broader economic conditions.
What's coming up next?
Up next, insights from Gareth Soloway about how the Fed might be kicking off inflation and what that really means for the economy.
You've got to stick around. Gareth Soloway will be bringing heat on Fed to kickstart inflation. Next crash will make August look like dip. Trust me, it's going to be a thrill.
So much to unravel ahead.
Anchors away as we navigate the choppy waters of the market. What's on the radar this time?
Here's the scoop. Gareth Soloway dives into how recent Fed actions could signal bigger shifts in the market.
Sounds like a turbulent ride. What surprised Gareth the most in this wild wave of market activity? What's the core message we need to dive into?
Gareth indicates that the Fed's aggressive cuts suggest underlying concerns about economic health, despite the narrative that all is well.
Digging deeper, what happened after that cut?
The market initially reacted negatively, leading investors to question the Fed's timing. However, institutions quickly pivoted the narrative to regain investor confidence, creating a gap up in stocks.
What about the corporate earnings outlook?
Deteriorating cash reserves indicate companies are spending heavily just to maintain revenue levels, hinting at overall earnings decline in the short term.
Interesting trends in sector performance. What are we seeing?
Investors are moving towards consumer staples and utilities as safe havens, indicating broader economic hesitance.
Gareth's crystal ball is on. What does he foresee?
He predicts the Fed may need to keep cutting rates, but warns this could reignite inflation even in a slowing economy.
How about the stock market's trajectory?
Gareth suggests a potential rise towards 6,000 before a noteworthy correction occurs, leaving many investors exposed.
So what's the final takeaway here?
Traders must stay vigilant, adapting to ongoing changes, especially with the Fed's unpredictable maneuvers. It's a risk-filled voyage, and preparation is key.
And fasten your life jackets. Coming up next, we hear from Tom on how dark pool liquidity predicted this market sell-off.
Trust me, You won't want to miss his insider insights on this.
Anchors away. We're diving into the tumultuous waters of last week's market actions.
Here's the scoop. The sell-off in major indices has many scratching their heads, especially the impact of dark pool liquidity.
Indeed, it seems Wall Street had a heads up on the news. What insights does Tom share about this? So what's the key takeaway from the latest video?
The core thesis reveals that recent sell-offs were already suggested by dark pool liquidity signals. This could indicate a pattern for future market volatility.
Let's break down the complexities of the market sell-off. What's the current sentiment?
The markets are showing significant sell-off reactions, sparking investor anxiety. Anticipating high volatility seems crucial.
What do those dark pool signals tell us about future trends?
Tom indicates these signals often predict market behavior before public news. Historical data supports potential bullish trends despite current fluctuations.
And what's happening with oil and the US dollar?
Recent movements show strong breakout patterns for both the dollar and oil, indicating new opportunities for savvy investors.
What are the predictions moving forward?
Expect heightened volatility as dark pool activities suggest that we could see further fluctuations in the market.
But what about recovery? Is it all doom and gloom?
Not at all. Historical trends indicate a potential bullish recovery might be heading our way, especially if investors capitalize on current dips.
To wrap it up, what's the big picture here?
The insights show that while caution is warranted, savvy investors may find opportunities to buy into potential bullish trends.
But don't drift away too far. Up next, we'll explore predictions surrounding upcoming bull markets.
Absolutely. You won't want to miss what's next on the horizon.
Anchors away on our next topic. Commodities are on the rise as global inflation takes hold.
Let's get straight to the facts. Philippe Gijsels predicts a new economic era of higher inflation and volatile commodities.
That sounds like waters worth navigating. What's driving these shifts in investment strategies? So what's the main thesis from Philippe Gijsels' insights?
The core thesis is that we're facing a long-term trend of higher inflation driven by energy costs and less globalization.
What can we expect regarding inflation?
Gijsels highlights the potential for energy price shocks to increase inflation as governments shift spending towards defense and climate.
Interesting. What about globalization trends?
Gijsels argues we're moving to a multi-globalization world with shorter supply chains impacting commodities.
What's driving the commodities boom?
Gijsels sees a coming bull market for metals like copper, essential for the energy transition.
How should investors proceed amidst these trends?
Gijsels suggests diversifying into real assets as a hedge against inflation.
What are Philippe's predictions for the commodity market?
He predicts a bull market in commodities driven by increased demand and geopolitical tensions.
What about the role of central banks?
Central banks may implement higher interest rates to manage inflation, leading to shifts in investment.
To wrap up, what are the big takeaways?
Gijsels emphasizes the necessity to adapt investment strategies towards real assets in this ever-evolving economic landscape.
But hold on to your hats. Up next, insights from Harley Bassman on where the next big bond trade is hiding.
Trust us, you won't want to miss what Harley has to reveal.
Anchors away as we set sail into the bond market's mysteries.
Here's the scoop. Harley Bassman explains the current trends shaping the bond market, including the Fed's rate-cutting cycle.
What gems of insight has Harley unearthed for savvy investors? Let's dive deeper. What's the core thesis behind Harley's analysis?
In essence, the bond market isn't just reflecting what's happening now, it's powerfully influenced by speculative future rates. Harley wants to unpack how this could affect investor decisions.
Let's break this down. Forward rates? What do they mean for investors?
Exactly. They're not crystal balls predicting the future, but strategically calculated pricing based on current data. The market suggests much lower rates ahead than the Fed hints at.
How's the economic landscape looking according to Harley?
He insists we're not in recession territory. With GDP maintaining around 3%, the fear seems overblown on surface-level data.
And what about the yield curve?
Inversion indicates stress, but with varying terms on Fed action, it's crucial to also consider investor sentiment.
What predictions does Harley make about credit?
He senses upcoming volatility in credit spreads, particularly as companies need to consider refinancing in tougher conditions.
To wrap it up, What are the key takeaways?
Harley emphasizes a need for strategic caution and adjustment in investments. Staying informed will be crucial for navigating the choppy waters ahead.
If these insights are resonating with you, consider subscribing for more valuable content.
Your support ensures we keep delivering valuable insights and analyses in the future.
As we summarize the insights shared by our distinguished guests, we can see a consensus on the rising potential of the commodities market, especially copper.
Absolutely. Philippe Gijsels highlights the potential in commodities, while Gareth Soloway raises concerns about how the Fed's moves could drive inflation fears.
And don't forget Jeff Snider's alarming perspective on the job market, suggesting that a recession could be just around the corner.
So while the opportunities in commodities look bright, the specter of inflation and recession makes for a complex landscape.
If you've gained valuable insights from today's discussions, be sure to hit that like button and subscribe for more expert analysis.
You certainly don't want to miss what's coming next. Dive into our other videos where we continue to unravel these key market trends.